Is it visible to you?
Yes, doctor.
See what we have done. We are talking about, see what we have done yesterday. We have done with respect to IFRS 15. Okay. When we have done IFRS 15, we are in the IFRS 15. How many steps are there? 5 steps are there. Recognition of revenue. Okay. IFRS 15. 5 steps. What are the 5 steps are there? You have the, first you have a contract, then you have the obligation, you have the performance, is it? You have a allocation and you have a recognition. Is that these are the 5 steps? Is that they will ask one question on this. In this chapter it will be around, I will say it will be around 4 to 8 marks also. Is that 4 to 8 marks? It will be allocated on this chapter, and it is, now you can understand it's the easiest one. Okay, COPA 5 steps. Then just I will go back to the things what we have done. We are talking, we are in terms of presentation in the financial. 1 minute. 1 minute. Revenue recognition, is it right? Revenue recognition with respect to contract cost. Is that revenue recognition with respect to contract? How you have to recognize? When you are talking about the revenue recognition with respect to the contract cost, what is there? How it has to be presented in the financial statements? 4 steps are there. First, you have to calculate the overall profit. Second, we have to calculate the progress. Third, we have to calculate in the statement of profit and loss account, and subsequently we have to show in the statement of financial position. Is that 2 different things? Is that how you have to make a presentation? We are talking in, first we have to see what is the overall profit. Okay, first we have to calculate profit. 4 steps are there. First you have to calculate the profit, then we have to take the progress, then we have to say statement of profit and loss account, and the fourth one is statement of financial position. These 2 things are there in our case. That's all. Is it? Now coming back to this, test your understanding 6. Okay, test your understanding 6. What they are saying, what is the requirement? Read the requirement first. Okay, how should this transaction be accounted for in the year ended 31st December 2001? How it has to be accounted in the year end? Means in the financial statements. Is it accounted? Now what is there? On January 1st 2001, Amir entered a contract with the customer to construct a stadium worth of how much? 100 million. Okay, how much is there? 100 million. The contract expected to take 2 years. Usually construction contract, where we are using this type of accounting, we use this type of accounting in construction contracts. At 31st December, means of 1 year, they have incurred cost. Cost to date is how much? Cost to date is 24. Cost to complete is how much? 20 million. Fine. You can do it immediately. You can do it on rough paper. Okay. You take one rough paper and you do it calculation. Amir purchased a plant to be used in the contract. He has purchased plant also. Is it how much? 16 million. The plant was purchased for 2001 and will have no residual value at the end of 2-year contract. Means they are using cost for this contract only. Depreciation on the plant to be allocated on straight line method. Means you have to calculate depreciation on straight line method, means, and for 2 years means 16 million divided by 2. Every year 8 million. Okay, every year 8 million. Amir measure progress on contract using which method? Using the output method. Is that they are talking in terms of output method, okay, based on the value of work certified to date. Is that work certified to date? There is something is there related to this. In the previous case, we have not, see where it is there. You have the formula is there. Is that work progress input method and output method? Output method, what is the formula? This is commonly done based on the value of work certified to date divided by the percentage to contract price. Okay, work certified to date as a percentage of what? As a percentage of total, as a total contract price. From where we got this formula? We got this formula from here. Is the value of work certified to date as a percentage of what? As a percentage of total contract price. Is that as a percentage of total contract price? Fine. Okay, we'll work it out that. Okay, I will put as a reference to. Is a reference to test your understanding 6. Okay, reference to test your understanding 6. Fine. Now they have value of the work certified 45 million. Customer paid is how much? 11.4 million. Customer paid is 11.4 million. This 11.4 million we will use where? We will use in terms of current assets. Okay, in terms of how much is the contract assets. Okay, we use in the contract assets. Now they are asking us about how the transaction should be accounted. Now you will ask me if it is with respect to which method you have to say. They have mentioned very clearly cost to date, work certified. Is that cost to date, work certified means they want to know what it has to be done in the, should be done in the financial statements. Fine. If this information is given, then it is definitely we are talking about how it has to be reflected in financial statement. Now, how many steps you have to take? Keep it in mind. This is very important. 4 steps. Okay, 4 steps. Here it is 5 steps. It is 4 steps. I will show you differentiation how it is work. The step 1. Is it the step 1? What we have to calculate the step 1? Overall profit. Overall profit is nothing but the contract price. Is that contract price is how much? 100 million. Contract price minus work cost to date, cost to complete. Okay, minus cost to date and cost to complete. Now what is the contract price? Contract price is how much? I will write contract price. Okay, contract price. How much is the contract price? Contract price is 100 million. Okay, contract price is 100 million minus, yes, tell me Hussein, how much is cost to date? Cost to date is how much? They have mentioned here. Cost incurred. Amir has incurred cost. How much they have incurred cost? They have incurred cost of 24 million. Okay, cost to complete. Is that there is a cost to complete. How much is there? Cost to complete is 20 million. Okay, any doubt is there? You just stop me. Okay, next you have purchase plant also. Is it right? It's dedicated to this contract only. How much is there? 16 million. Is it right? This is the only cost. Is that what is given? Simple, very simple. I am telling you this. It's not difficult. Is that cost to date, cost to complete, and planned cost? How much you will get? Just check me very quickly.
40.
How much?
40.
40 million. This 40 million is overall profit. Is it? This 40 million is overall profit. Fine. Are you clear about this?
Yes, doctor.
Step 2. Step 2 what? We have to take progress. Which method they are using? They are using output method. Is it? Which method they are using? They are using output method. In the output, what is the formula for output method? What is the formula for output method? It is nothing but work certified. Is it? Work certified divided by, as a percentage means 100. Okay, that is work certified by total contract price. Total contract price times 100. Here it has been given in the fourth paragraph, last paragraph. Value of work certified is how much? Value of work certified is 45 million. Total contract price is 100 million times 100. It comes to how much? It comes to how much? How much? Fast. Simple, my dear. You don't need calculator also. It is 45%. 0, 0 cancel. How much is there? 45 by 1 into, is that 45%? 45 million divided by 100 million. Is that 45 million divided by 100 million into 100? How much? 45%. Is it okay? Is it okay?
Yes.
Where are you, people?
Writing.
Okay, okay, I understand. No problem.
Yeah.
Okay. Is it okay, Hussein and
Yes,
Sumayya?
doctor.
If I am fast, tell me, okay? Immediately you send one alert, okay? So doctor, little bit slow. Immediately I will reduce my speed, okay? Even I will give you space for that, okay? Step 3, okay? Step 3. This is where we are talking in terms of profit and loss account. Is that? This is we are only talking about extract, okay? We are talking only about the extract. How much is there? Is it right? There is nothing, is there? We can, 1 minute, we can put profit and loss account, okay? We can put profit and loss account. What is the revenue? How much you have to see? We have completed 45%. When we have completed 45%, we have to take 45% revenue only. Is that? We have to take 45%. This is rule, okay? Revenue will be how much? I am writing for your convenience, okay? Revenue is nothing but contract price, is it right? Contract price times progress. Okay, revenue is how much? Contract price times progress. Contract price is 100 million. Progress is how much? 45%. Revenue will be how much? 45 million. Is it right? Revenue will be how much? 45 million. How much we have made the progress, that much only we have to take it as a revenue. Okay? Simple concept. Okay? That much only we have to take the revenue. Now, how much is the cost of sales? Cost of sales is nothing but cost to date. Is it right? Cost of sales is nothing but cost to date. How much is the cost to date?
$24 million.
24 million. Next. Is it? Next. Anything we have to deduct? Anything we have to deduct?
Blunt cost.
Huh?
Blunt cost.
Depreciation.
Depreciation. Exactly. Thank you. Is that depreciation? How much is the depreciation? 16 million cost by life. Okay. 16 million. See these things now. These things now you should be in a better position. 16 million by 2 years. Is that 16 million by 2 every year? Okay. Every year. Street line method. They mentioned where depreciation on the plant is allocated on straight line basis. How much is there? 8 million. How much is there? 8 million. It comes to how much? It comes to how much? 45 minus 24 minus 8, 32. 32 minus 45, 13 million. Check again. This is the profit during the year. Okay? Profit during the year. The first one is overall profit. Understand that? The first one is overall profits. The third one is profit during the year. Is it okay?
Yes, doctor.
Step. I'm giving you time. I will give you 1-2 minutes to write down. Okay. I will give you time for that. Then I will ask. Okay. Step 4. Be very relaxed. Understand. Is that understand? Relax. Any doubt anywhere you stop me. Anywhere. There is nothing that you have to feel. The statement of financial position. Okay, now what we are going to show is statement of financial position.
Revenue today.
Non-current assets. Plant. Is it non-current assets? Plant. How much is the plant? 16 million. How much you have calculated depreciation?
8 million.
8 million. Okay, how much you have calculated depreciation? 8 million. What is the value of plant? 8 million. Okay, what is the value of plant? 8 million. Next, we have to show what? We have to show current assets also. Okay, now, what is the current assets? See, current assets is nothing but, is it right? How much is the revenue and how much you have received? Receivables. In simple words, it is receivables. Okay? In simple words, it is receivables. How much is that receivables amount? See, how much you have revenue? Revenue is 45 million. In the 45 million, how much the customer has paid? You see last paragraph. How much the customer has paid? Customer has paid 11.4. Is it? Customer has paid 11. See, you have completed 45 million contract construction. You have received till now 11.4. The balance is you have yet to receive. Okay, receivables. Is it? You have yet to receive is a receivables. Very simple. Now, from now onwards, little bit you have to put here only. Okay, you should not go do the calculations. Okay, I will make sure that in section A and B when you are having the calculation questions, you can do just with numbers. Okay, you should not write all the things. Nobody will ask you that you have to show details. Okay, nobody should ask you. I will write here contract asset. Okay, contract asset. Without writing also we can do. Is it right? Total revenue is how much? Revenue is 45 million. Okay, revenue is 45 million. From where we got this revenue? We got this revenue from here. Okay, we got this revenue from here. Is that minus cash received? How much? Cash received is 11.4. Is that what is the difference here? 11.4. 45 minus 11.4. How much? Very fast. I will say now I will tell you. Calculator has to be in front of you. How much is there? 33.6. Is that? I am writing for your understanding. Okay. Revenue is how much? Revenue is 45 million minus cash received is how much? Cash received is 11.4 million. 11.4 million. The balance is 33.6 million is the contract asset. Yes, Sumaya and Hussein. Is it clear to you?
Yes, doctor.
Yes, doctor.
Okay. Simple. See, again, I'm just a quick review. You write down. Is it done?
Yes.
Yes, Hussein. Over?
Yes.
Yes, Sumaya. Is it done?
Yes.
Okay. Fine. Now, nothing is there. It is what they say. They are talking about 3 contracts. Is it right? Hard floor company fits out nightclubs. Their project generally take number of months to complete. The complete has 3 contracts. It is only practice questions. Okay. At progress ended, they have 3 contracts in progress at the year ended 30, and details are as follows: cost to date, cost to complete, contract price, work certified, progress payments. Okay. Hard floor company accounts for revenue and its contribution using the percentage of work completion from the sales earned. See that's it. As work certified compared to total assets sales value. Which method is there? Input method or output method? Input method or output method? Work certified divided by total price into 100.
Output.
Output method. Calculate the effects of the above contract upon financial statements for the year end. Maybe some contracts will give profit, some contracts will give losses. Fine. Okay, we are not concerned about that. If they give like this, there will be a combination of profits and combinations of losses. Okay, step 1. Okay, step 1. What we have to do? We have a overall profit. Okay, go in the same format, J, K and L. Okay, J, K and L. It is in thousands. Okay, it is in thousands. Fine. Now, what is the steps in the overall profit? You can refer contract price. Is right? First is contract price. How much is the contract price? Contract price is how much? 416. Yes, Hussein. How much is the contract price? 416. This is the contract price.
684.
684 and 300. Okay. Next, cost to date is how much? Cost to date is how much? Cost to date
270.
270, 440,
20.
20.
20.
Cost to complete how much?
90.
90,
190 to 20.
190, 220. Okay. Total profit, overall profit is how much? Overall profit or total profit, both are same. Don't get confused. Okay. How much?
56,000.
56.
54.
54.
60.
60. Okay. Fine. Very simple. I will make you independent when the moment I start doing exam questions. Okay. I will make you independent. Fine. Next step, I am writing here step 2, progress. Is it right? Step 2, I am writing progress. J, K and L. Okay. Next, what is the formula? Formula is this one. Okay, work certified. Write down. If I am not writing, don't say that you should not write. You have to write work in progress. How much is the work certified is how much? Work certified is how much? 312. 312 divided by contract price is how much? 416 times 100. How much you will get?
$41,600.
Huh?
75%.
75% here.
Yeah, 75.
Okay. Next. This is for J. Okay, I'm putting for K. K is how much? K is how much? 456 divided by contract price is how much? 684 times 100.
6%.
Huh?
6%.
67. 66.66. If you get 66.66, you straight away take 65.7%. Nothing will happen. We are not having, this is not a principal error. This is the calculation adjustment. Okay, nothing will happen. Take 67%. Next, what is the third one? How much is the 300 divided by contract price is how much? Sorry, work certified to date is how much? Work certified to date is nothing is there. Understand? But so see the thing. There is nothing is there. Is right? Contract, nothing is there. Contract price is how much? 300 times 100. There is nothing is there. Don't worry about that. You put only dash. Nothing certified. Okay? Nothing certified. Are you clear about this?
Yes.
Fine? Yes. Are you comfortable, Hussein?
Yeah, with you, Doctor.
Okay. Okay. Step 3. Okay. Step 3. What is the step 3? Profit and loss account. Okay. What is the step 3? Profit and loss account. JKL. Okay. JKL. How much is the revenue? Now you tell me. Contract price into progress. Okay. What is the revenue? Contract price times progress. Okay. Contract price times progress. Now, see the thing. This is very, very sensitive. Okay. Very, very interesting. How much is the contract revenue is how much? What is the price? Contract price is how much? The first one is how much? The first one is 416 times 75%. How much? 416 times 75%.
300.
312. Okay.
312.
312. Put the it like this. Okay. 1000 in thousands. Okay. Next. Second one is how much? Second one is how much? 684 times 67%.
67.
Okay. 684 times 67%.
458.
458.
58. Okay. 458. Now, what is the last one? Very interesting.
300 to 300.
300. Contract price is 300. There is no work in progress. There is no progress. Zero. Progress is zero.
Yes.
Then
Can we take 300 only?
how can you take 300? You can. Still
Zero.
there is no progress. You have how much you have spent? Cost incurred to date is how much?
20.
20. Cost incurred, see, there is no progress. Cost incurred to date is 20. You will see, you are doing construction. Is it right? Take an example. You are doing construction. You have incurred 20 million. What you will ask? So whatever cost you have incurred, give me that cost. As simple as that. Don't give me any profit. Don't give me any profit. See, you will not put anything from your side. Is it right? You are doing business. You will not. There is some cost is there. From where you get the cost? You get the cost from the contract only. Is it right? Now 20 million is the cost to date. Okay, cost to date is 20 million. You don't have any progress. Okay, if you don't have progress, how much you will take? You will take the cost to date. I am writing
The
here.
cost.
Is it right? I will write here for your understanding. Cost to date is taken as revenue when no progress. Okay? Are you clear about this?
Yes.
Okay? Fine. is that when it is cost to date is taken as revenue. See, you have incurred 20 million. Now 20, you are not going to, you will not, we are not so so rich that we will spend and we will we will spend from our pocket. Okay, we will. This is what we are learning. Is it? This is what you are learning. There is no progress, but you have incurred a cost of 20. That 20 we will recover from that. That is going to be treated as the revenue. Fine. Second, minus what is cost of sales? Cost of sales is nothing but cost to date. Is it? Cost of sales is nothing but cost to date. How much is the cost to date? How much is the cost to date?
270.
How much is the cost to date? 270. Is it there?
Yes.
440.
440. Is it? 440. And it is how much?
120.
Only 20. See, there is no progress, there is no profit. Now you understand. There is no progress, there is no profit. If there is a progress, there will be a profit. Okay? There is no progress, there is no profit. What is the profit during the year? Profit during the year is how much? 312 minus 270, 30 plus 12, 42, 448, 18, okay, 18 odds. You can put it in the here it has been given how much? 456, because we have taken rounded off. Okay, because of rounding off we got this one. Because of, don't worry about that, because of rounding off. And here how much is there? 0. Is it? Because how much is there? 0. Take your time, write down. Is it okay?
Yes, doctor, it's okay.
Okay.
Yes, doctor.
Next. What we have to do? The step 4 is what? The step 4 is statement of financial position. J K L. Is there any assets is there? What we have to do in the statement of financial position?
Account receivable.
Is there we have any non-current assets are there? Any non-current assets are there? Any plant and machinery is there? We don't have, is it right? We don't have any
Yeah.
any non-current assets is not there. Okay, you will get what? You will get the contract asset. Contract assets are nothing but revenue minus cash received is equal to receivables. We are not saying this in black and white, but it is understandable. You have complete revenue is this much, you have received cash is a progress payments, the balance is receivable. Okay, the balance is receivable. That's all. We will not use current asset here also, but it is similar to current asset. Understand point? We will never use current asset, but it is almost similar to current asset only. Fine, almost similar to current asset only. Revenue, how much is the revenue to date? How much is the revenue to date? Take step 3. Is that we take step 3? If we are taking from here, okay, we are taking from here. How much is there? 312 456. Actually it is 456. Okay, actually how much? It is 456. We have rounded it off. Okay, we have rounded. I will make some here. It is 66.67%. okay, 4, you can put, nothing will happen. I don't want to change. 458. Okay, now how much is the revenue to date? We don't have. Whatever the cost is, how much? 20. Is that how much is the cost? 20. Fine. Next, how much you have received cash? Is that how much you have progress payments? Okay, progress payments. Is that progress payments? How much is the progress payments? How much is the progress payments? How much is the progress payments? 250? 250? It is there here.
Yeah.
Is
That's
last
250.
part. Okay, progress payment. That is nothing but what they have paid to us. Is that? It's nothing but cash invoice to date or cash received. Okay, is it 358? Now they don't have any payments. Okay, their progress payments are nothing. Is it? Now, understanding my point, step 4. Again, I am asking this. Is it clear to you what we are doing in step 4? Revenue is, see, what will happen? Just for your understanding, you will have a credit sales. Okay, sales, as simple as that. I will not say credit, sales. In the sales, you have received some amount. Is that you have received some amount? Is that a percentage of amount? Is that you have received percentage cover? What is the balance? Balance is the receivables. Here also same thing. Revenue is there. You have received some amount. Is that you are yet to receive? Is it right? It is nothing but yet to receive. I am putting like this. Yet to receive. Don't write this in examination. Okay. This is only for your understanding. Is it right? This is for only for your understanding. Are you clear about this?
Yes, doctor.
Yes. How much is the difference?
62,
62,
100,
120.
20.
Take your time, understand step 1, step 2, step 3, then tell me. Once it's over, say yes. Is it okay?
Yes, sir.
Is it easy, this one?
It's not difficult, but we need to practice
We
to
need
get
to
it.
practice.
Yeah.
That is part of the life, okay? Now nothing is, see, all chapters are same, nothing is difficult, okay? That's what we are learning is, we are just learning the points, that's all, okay? We are learning the concepts. We are beyond, we are not doing anything. Take my word, we are just working the basic concepts. In SBR is also not difficult. Understand point? SBR is also not difficult. Only thing is we are applying this at a higher level. That's all. Fine. Now, tell me this. This is a complete one. Is it right? Prepare extracts of financial statements of Meriview. This is not that much clear, okay? Just you refer, if you are having printout, please refer, sorry, okay? What you have to do, they are asking us with respect to 31st March and 31st March 2001 and 31st March 2000. Extract of financial statements. When we are talking about financial statement, we have to take the profit or loss, and we have to take statement of financial position. Both we have to take, okay? Both we have to take a complete overview, okay? A complete understanding about how the things will work, okay? Very complete understanding. Now, fine. What they say? They're saying that Meriview specialize is long-term contracts. In each contract, Meriview is entitled to receive payments reflecting the progress work. So revenue should be recognized over time. Means how the same process what we have done. One of its contract, Better Homes, naturally construction contract, is to build a complex of luxury flats. The price agreed for the contract is how much? 40 million. Scheduled to complete on 31st December. Is it 31st December? Details of the contract to 31st March. Dates are important. Understand point? Dates are important. Fine. It is 31st March. It will complete on 31st December. Commencement date. When they have commenced, 1st July. Is that take like this, 1st July. I will put line wise like this. Is that from 1st July 2000 to 31st December 2002. Okay, they are going to have what they are talking about, 31st March 2002. Calculate how many months are there. 1st July 2000 to 2001, then 12 months. July, August, September, October, November, December, January, February, March, 9. 12 plus 9. How many months?
Plus
I will put
21?
for you. Okay, here very clear. This is 30th June. Okay, 30th June 2002. Here how many months? 12 months. Here how many months? 9 months.
9 months.
Here how many months? 9 months. Okay. Here total how many months? Here total 21 months. Is it? Here total 9 months. Overall how much? Overall 30 months. Total how much? Total 30 months. Are you clear about this? Okay. Fine.
Yes.
Next. This is now you see the things. Okay. Commencement detail. Contract cost. Is it contract cost? Contract cost. 2001. Okay. Just architect fees 500, materials 2,800, labor cost 3,500. Is it? Labor cost. It is it? Overheads is 40% of direct labor. 40% of direct labor. We have to take 40% of this. Estimated cost to complete 14.8. Okay. Plant and machinery used exclusively on the contract is 3 million. Okay. 3 point how much? 3.6. It is how much? 3 million. Sorry, 3 million. Okay. At the end of the contract, it is expected to transfer to a different contract 600. Depreciation is based on time apportion, on time basis. 21 on time basis means you have to take 21 months, whatever how you are working out. Better Homes made a progress payment. They have this we will use in balance sheet. Okay, revenue minus progress payments. Is it revenue minus progress payments? At 31st March, the details of the construction contract has been summarized. Cost to date since the start of the contract, excluding depreciation, this much. Estimated cost to complete, excluding depreciation, is this much. A further payment was received 31st March. May review accounts for profit on construction cost on basis of input method measured using the percentage. What is the input method? Cost to date divided by total estimated cost. Is that cost to date? They have given the formula also. Okay, they have given the formula cost to date compared to total estimated contract price. We have to do what? We have to do for 31st March 2001 and 31st March 2002. Okay, 31st March 2001. How many months are there? 31st March 2001.
From beginning.
31st March 2001. 31st March 2001. See, again there is a litigation here. Is that there is again a catch. 31st March 2001. Is it right? 31st March 2001.
9 months.
31st March 2001. How many months are there?
9 months.
9 months. 31st March 2001, 9 months. Okay. 31st March 2001, 9 months. Okay, fine. Slowly you follow me. Slowly. Step 1. Okay. Step 1. What is the step 1? Overall profit. Okay. What is the step 1? Overall profit. Find overall profit. Particulars. Is it right? Same steps. Only thing is 31st March 2001 and 31st March 2002. Is it 31st March 2002? Fine. 31st March 2002. Overall profit. How much is there? First is what is the contract price? What is the contract price? Contract price 40 million. The agreed price of the contract
Yes.
40
yes.
million. Okay, the agreed price of the contract is 40 million. If you are finding difficult in any specific color, tell me that we don't use this color. I will not use that color. Okay. Fine. Now, the what is there? Second one. Second one is minus cost to date. Okay, minus cost to date. Minus cost to date. Fine. What are the things? What are the things they have mentioned? Cost to date. You have they have mentioned separately. Okay, what can we do? We don't have any option. Okay, we have architect fees. Is it? We have architect fees. How much is the architect fees? Architect fees again.
500.
Again they have put this in the here and here. Zeros are confusing to us. Okay, zeros are confusing to us. How much is there? How much is there? 1 minute. I will make it uniform, my dear. 1 minute. I make it uniform. Okay, I put it as thousands. I put it as thousands and I put it as 40,000. Okay, in zeros. Okay, in zeros. Architect fees. Architect fees is how much? 500. Okay, slowly and steadily do. Don't rush. Is it? So slowly and steadily. This is for this and this is for this. Is it right? This is for this and this is for this. 500 is architect fees. Materials are how much? Materials are how much? 2,800. Direct labor is how much? Direct labor is how much? 3,500. Okay. Overheads are how much? 40%. Okay, 40% into 3,500. How much will get? 350, 350, 700, 700 into 2, 1,400. Check again. Is it right? Check again. Okay? Is it clear? Is it okay? Next, what we have to add? Anything else? What we have to add? Anything else?
We can machinery, plant and machinery.
Depreciation.
Depreciation, plant and machinery.
Is a little bit careful here. When I say careful, we have to be very careful. Okay? Careful. Now, depreciation is time apportioned. What they say depreciation? Depreciation is based on what? Depreciation is based on time apportioned basis. Is it? Depreciation is based on time apportioned basis. Fine. Now, total how much is there? Total months are how much? Total months are how much? 30 months. Okay. From here to here. Is that from here to here? How many months are there?
9 months.
9 months. Okay. From here to here, 9 months. I am changing the color. Okay. From here to the end. Okay. From here to end. How many months are there? From here to 30, where it is till here to 31st March.
13.
Okay, how many months are there? How many months are there from here? What they are saying? 31st March. Yes.
12 months, no?
How many months are there?
Twelve months.
Two, how many months are there? 12 months. Fine. Time apportion basis. Time apportion basis. 1 minute. From 1st July 2000 to 31st March is how much? 9 months. July 2000. Nine months. Okay. Next. Prepare extract for reflecting the impact of for the year 31st 2001, 31st 2001, and for the year for the year 2, for the year 2. Just check like this: 1st July 2000 to 31st March 2002. They are saying that, listen, they are saying that prepare the extract for the financial statement reflecting the impact of the contract price for the year 2. They are not using for the year ending, they are using for the year 2. So it means from 1st July to 31st March, and from 1st July to 31st March 2002. Are you clear about this? Just I want to make you brief, okay? They are saying that they are saying that it is from 1st July to 31st March. Okay, 1st July to 31st March. Just give me time. Again, I will come back to this. Okay, I will come back to this. I am marking this for you. Okay, I will give more explanation as things will progress. Okay, here how much is there? No. One minute. Okay, one second. I'm just want to make it little bit more clear for that. Fine. March 2001, July 6 plus 3, 9 months. 6 plus 3, 9 months. Fine. 6 plus 3, 9 months. Okay. And how much is that? Fine. Listen carefully. Okay. Here what they are saying, actually see the thing. Prepare the extract for financial statements reflecting the impact on the contract price for the year 2, means from the year from 1st July to 31st March, and from the 1st July to 31st March 2002. Okay. Here how many months are there? Here 9 months are there. If you are taking here, in this case, how many months are there? It is
12 months.
21 months.
20.
Okay, 21 months. Is it 1st July to 1st 2001, then 1st till they say 2. Is it 21 months? Depreciation, what we have to do? Depreciation is, how much is the depreciation? What is the value of depreciation?
3,000.
No. What is the value of the asset? The value of the asset is how much? The value of the asset is how much? 3.6. Okay. This is 3.6. And see the thing. The value is how much? 3.6. Okay. And they have transferred to another contract. How much they have transferred to another contract? 600,000. Is it right? 600,000. Just I am putting like this. Okay. See, what is the value? Value is 3.6. Okay. Now they have transferred to another contract. Remaining. Okay. Remaining. How much they have transferred? They have transferred to another contract is how much? 600,000. Means the value to this contract will be how much?
300,000.
3 million.
3 million.
Is it right? Yes, Hussein Sumaya. Are you understanding my point? The plant and machinery used exclusively on the contract cost is 3.6. July 1st. At the end of the contract, it is expected to be transferred to a different contract. How much is the value? 600. Depreciation is based on the time apportionment. Means what? As simple as that. Exact value of the asset value we have to take. Okay, depreciation. How much is there? 3 million times, what is the first one? I am putting this here. Okay, I am putting this here. Is it right? First one is how much? It is for 9 months. 9. Total months are how much? How many?
21.
Total months are how many? We have calculated here. How many are the total months?
30 months.
30 months. Is it? Total months are how much? 30. Divided. It is time apportioned. Is it? Time apportioned. Is it? How much you will get? 3 million into 9 by 30. 3 million into 9 by 30. How much you will get?
900,000.
900. Is it? The second one. Is it? This is now. Next 3 million. 3 million. This is little bit difficult. Okay, I'm telling you. I'm telling you difficult means I said this thinking. Okay, 25 months, 21 months divided by 30 months. How much you will get? How much you will get?
21.
20.
21 or too many?
2.1. Is it right? 2.1. Fine. It is little
Yes,
bit,
yes.
little, see, nothing is there. What they say, 3.6 is the value of the asset, 600 is the transfer we have done, we will take 3 million, time apportion. This is what actually you have to focus on this. Time apportion, how much time we have taken, okay? Time, how much time we have taken. They have said that from 1st July 31st March 9 months. From 1st July to 31st March 2000 it is how many months? 21 months. Is it right? If you put anything we have to take apart from this. Are you clear about depreciation? First tell me.
Yes, doctor, clear.
Yes, Hussein. Sumaya. Little bit doubt. I can understand. See, I can understand with your response. Okay. I can response is how we are, you will have a doubt how we are taking 9 months and 12 months, 21 months. Is that how you are taking 9? This is a time apportion basis. Based on the time we are calculating. We are not calculating on straight line basis or return down value method. Okay. We are not calculating on straight line basis or return down value. First time we are doing like this. Is that this is the first time we are doing, and hopefully we are not going to do again this. Okay, we are not going to do again this time apportion methods. Okay, based on the time we have to calculate depreciation, as simple as that. Okay, based on the time, anything we have to take, come back to this. We have taken architect fees, we have taken materials, we have taken direct labor cost, overheads we have taken. We will calculate estimated to complete next one. Okay, we have taken depreciation, plant and machinery. Is it? As 31st, the details of the construction cost has summarized. We will take in the next stage. Okay, estimate. A further progress payments. We will take progress payments at a later stage. Is it right? We have taken all the things. If you put all this one, how much? What you will get? You will get what? Cost to date. Okay, what you will get if you putting this all the things, cost to date. Is that cost to date? This is what cost to date is. How much is the cost to date? How much is the total of this? How much is there? 500. 500.
9,100.
How much?
9,100.
9,100. Okay, 9,100. Okay, this is what? Cost to date. Cost to complete is how much? Cost to complete is how much? How much they have mentioned? Cost to complete. Here they have mentioned cost to complete. How much estimated cost to complete? How much?
14,800.
Estimated cost to complete. How much? 14,800. It is there. It is there 14,800.
Yes.
And here how much cost to complete in the second case? How much is there here in the bottom?
6,600.
Fine? Now, cost to complete. Anything we have to take here? Total cost. What is the total cost you will have? What is the overall profit? Overall profit is nothing but the cost to date plus cost to complete. Okay, cost to date plus cost to complete. Now, anything we have to add here? Think. Anything we have to add here? Think. Cost to complete. Anything cost to complete? Very cost to complete. Here depreciation, how much you have taken? In the first case 900. In the second
900.
case how much you have taken? 2100.
2,100.
Now is separately. Is that this is a separate case. If you want to take the depreciation, is it right? This is 900 we have taken. If you want to know what is the total, means what happens after this period, we have to take that cost also. Is that we have to take that cost also. How much? See, if you continue by 31st March 2001, is that if we continue 31st March 2001, how much is the depreciation? 900. If you want to complete the contract, we have another 2100 depreciation we have to calculate. Is right? What we are doing here in the step 1, we are calculating overall profit. Is it? We are calculating overall profit. Cost to complete means we have to know what is the next period depreciation also we have to include. Next period depreciation. Next year depreciation. How much is the next year depreciation? 2,100. See, this is, understand my point? This much is the cost to date. Okay, cost to date is how much? See, we have this clearly in the beginning. Okay, this is the contract price. Now we want to know what is the cost to date. Cost to date we have done architect, materials, all those things. Fine. Depreciation also we have taken for 9 months. Okay. Estimated cost to complete also we have taken 14,800. Here we see what they have mentioned. Estimated cost to complete excluding depreciation. See on the left hand side, I am marking this. Is it estimated cost to complete excluding depreciation? Here also estimated cost, contract cost, estimated cost to complete excluding depreciation. Is it right? They have mentioned excluding depreciation. Means we have not taken depreciation, we have to take depreciation. That is the reason we are taking this amount, because it has mentioned very clearly in this question we are only working on depreciation. Okay, depreciation is only the critical point here, nothing is there apart from that. Fine. Now, depreciation here what we are taking? We are taking depreciation of 2001. Now, if you take for 31st March 2002 also, we have taken depreciation only 2100, excluding depreciation. Means we have to add the depreciation what we have calculated here. Is it? Here what we are doing, this depreciation we are showing here. Is that once we have done this, now you will understand. Once you have calculated this, what will happen? You will get the total cost. Is it? You will get the total cost. Fine. How are you clear about this? You will get total cost. Getting my point?
Can you explain it again? Better?
Fine, no problem, no
Yes.
problem, no problem.
Yeah.
See what happens, is it right? Now, see what they are said. They said that this is for 9 months. Okay, this is for 9 months and this is for 20 months. 20 from the beginning.
21.
From the beginning to the
End.
end. Okay, from beginning to. They have taken a contract price 40 million, 40 million. We are doing separately. Keep it in mind. Okay, we are doing separately each case. First case is for 9 months. Second case is for 21 months. Okay, this is for 9 months. This is for 21 months. That has to be very, very clear. Is that has to be very, very clear. Now, till now you don't have architect fees. These are the things we have done. How much is there? Cost to date. Cost to date is how much? 9,100. Are you clear about this? Okay.
Yes.
Now, here also they have mentioned cost to date. Is right? Here also they have mentioned, see the things. Here also they have mentioned contract cost to date. Contract cost to date as of 31st March 2002. How much? 31st March 2002. What is the contract cost to date?
Yes.
How much?
2400.
2400. 9100 is this. I have not written 2400. Okay, any value which you find not traceable, ask me. I will give you the reference for that. And I am taking the values from the here. Any additional calculations, I will let you know. Is it? Now, cost to date is 9100. Cost to complete from here only we have taken 14,800. Next year depreciation till if you complete the project, how much further depreciation is there? 2,100. Because why we are taking 2,100? Here they have mentioned very clearly. Cost to complete is excluding depreciation. Is it? Cost to complete is excluding depreciation. How much is the total cost you are getting? 9,100, 14,800, 2,100. It comes to how much? Nine 100, 14,800, 26,000. Here how much we'll get? Second case.
$30,000.
30,000. Are you clear about this?
Yeah.
Yes, Hussein, Sumayya. Hussein, Sumaya?
Yes, sir.
Little bit, okay, okay, I can understand. If I'm not getting response immediately, I can understand. You need little bit more clarity. Okay, fine. Overall profit. Overall profit. How much is the overall profit?
40.
How much is the overall profit? What is the contract price minus total
26.
cost?
14,000.
14,000. I will writing for your understanding. 40 minus 26. Here overall profit is how much?
10.
10. Only point of difficulty is, I will tell where there is a difficulty, I will say, because you are doing it the first time, I can understand, okay? I can understand. Only the point is depreciation, okay? Keep this in mind. Somewhere we are going to cover again, then I will focus in much detail. At this point, understand. Now you can understand, yes, depreciation is little bit critical here. Okay, you can, at least you will have a idea that depreciation is little bit critical here. Okay, we will focus on this. What we have done? We have done overall profit. Okay, we are done overall profit. Now, what is the step 2? Step 2 is what? Step 2 is progress. Is right?
Progress.
Which method it is
Yeah.
there? It is input method. Okay, it is input method. What is the formula for input method? They have given in the question, they have given. Is it right? What is the formula? Cost to date. Is it right? Cost to date divided by contract price. Sorry, cost to date divided by total cost. Is it? Cost to date, what is the formula? Cost to date divided by total cost. Fine. Now, what is there? Just take the things. Cost to date is how much? Here they have mentioned cost to date is how much? 9,100 divided by total cost is how much? We have calculated here total cost. How much is the total cost?
26.
26,000 times 100. It comes to how much?
One one eight.
1 ha. 9,100 divided by 26 times 100.
35.
And here how much? That is the reason I am writing. I know. That is the reason I am writing everything here. 20,400 divided by 30,000 times 100. It comes to how much? One minute. 1 minute. Cost to date is how much? 20. 20. How
400.
much is the cost to date?
2,400, right?
20. Cost to date is how much? Cost to date is how much? 1 minute. Cost to date is how much? Any idea? Cost to date is how much?
Not 20,400.
20,400 plus
2,100
why?
for the next period.
Yes. For the next period, how much? Depreciation is how much? See the thing. Is it? 20,400. 20,400 plus 2,100. Is that? That is the depreciation we have to take. Is it right? The depreciation to be incurred is for the next period. It comes to how much? 2,400. 2,400 plus 2,100. It comes to how much? 22,500. Is it right? Little bit tough, I know. Is it right? Your silence gives me a clear message. Okay? How much you will get? How much you will get?
75.
How much? 75.
75.
Yes, Hussein, where are you, dear?
Here only.
I know. Sumaya, I know. Okay, I can understand this. See, definitely it is not for you. People will find, initially it will little bit advanced, na? Okay, little bit advanced. Okay, now, okay, this is the progress. Okay, progress what we have done as per the input method. Is it as per the input method? Cost to date divided by total cost. Okay, now follow me. That's very important. Okay, follow me. If there is difficulty, fine. Next time it will not. It will be more little bit easy. Okay. Now step 3 is what? Step 3 is profit or loss account. Okay. Step 3 is profit and loss account. Same thing. Is it right? Same thing. I will put one dash here so that you will be very clear about what we are doing, what we are doing. Okay. Next. How much we have to take? What is the revenue? Revenue is nothing but cost, contract price into cost per se progress. Is it contract price into progress? 40,000 times 35% and 40,000 times 75%. This is 31st March 2001 and this is 31st March 2002. Is it okay?
Yes.
Next. How much it will come?
14,000.
How much?
14,000.
14,000. Okay.
Yeah.
If you are in this business now, you will understand this. We have to be in contract business. That's as simple as that. Okay. We have to be in the construction business. Is it right? In the construction business, then only we will understand. Next. How much is for the next? Next.
30,000.
Huh?
30,000.
Think carefully. Think carefully. Think carefully. Little bit. I'm giving you time. 35% and 75%. Okay? 35% and 75%. Now you will understand. We are doing from 1st July to 31st March. How many months? 9 months. If it is 9 months, what is the completion? Completion is 35%. If you are taking 1st July to 31st March, how many months? 21 months. How much is there? 75%.
25.
It is part of that. Okay, it is part of that. As simple as that. Fine. Fine. Now 75%. Okay, 75%. Okay. Now what it says that it is 14,000. Okay. How much you are getting here? Here how much you are getting? 30,000. Is it right? 30,000.
Yeah.
In 30,000 already 14,000 is included.
Yes.
Because 35% is for this much. If it take 31st March, it will be 40,000. Is it right? Now it is included, means how much already we have taken? We have taken 14,000 is already there. Is it? If 14,000 is already there. Now if you are taking till 31st March, you have to exclude what? You have to
14,000.
14,000. Is it? We have to exclude
16.
and we have to take only how much?
16.
16,000. Continuation. Continuation. That is what it says. From 1st July to 31st 2001, from 1st July to now. Is it right? This is the revenue. Fine. Now cost to sales. Cost of sales. Cost of sales. How much is the cost of sales? I can put it as cost to date. How much is the cost to date we have calculated?
9,100.
9,100. Okay? 9,100. And how much is the cost to date we have calculated in the second case?
Yeah. 22,500.
22,500. Again we have to deduct what?
21.
9,100.
Yeah.
9,100. Okay? 9,100. How much you will get?
One 13.
13,400.
Yeah, 13,400.
This is profit during the year. Why it is difficult, I will tell you. We have not done this type of things previously. We have not done construction accounts. Okay, we have not done construction accounts. Construction accounts are completely different. First time we are doing, okay, because of that we are finding the things like this. Okay, in the previous case everything is straightforward. 1 2 3 4 tack we have done this. But what happens? Life is not so easy. The real situations are so complicated. Is it? Real situations are so complicated. How much you have to, if see what happens, assume, take example like this. You have spread over 3 years. First year you will complete at 35%. Second year you have completed 75%. Is that? Third year you will complete 100%. Now 35% fine, first year no problem. 75%, the moment you are coming to 75%, 75% includes 35%. Isn't it? 75% includes 35%. Now what happens? That is what we have done here. Total profit during the year. Is that when we have done 75%, we will exclude 35% because already we have taken 35% into accounting. Is it right? Already we have taken 35% into accounting. Now in the next stage, we will not, in 75%, we assume, and it is a fact, we assume that 35% should not include, we have to take the difference of progress. Is that we have to take the progress from 35 to 75. That is the reason in second case we have deducted what? 30,000 minus 14,000. 22,500 minus 9,100. Then we will say what we have earned profit. I will not say profit during the year. I will make it little bit more defined, profit during the period. Is that profit during the period? How much is the profit during the period now? 14,000 minus 9,100.
4,900.
Next. $16,000 means 600 will be there. 3,600. Check. 3,600. No. 15 minus 2, it is 2,600.
2,600.
Is it right? It is 2,600.
2,000.
You call it as profit during the period, or you can put it as, is it right? You can put it as gross profit also. I agree with you, little bit difficult, but at least we have the understanding about this. Okay? Next. Can I just write, if we have completed, just take it. See, again I will just revise it from the beginning. Okay? You have the contract price, you have cost to date. Is it right? Cost to date. They have mentioned cost to date, plus we have taken the depreciation. We have cost to complete. Is it right? When you have cost to complete, because it has not been included depreciation, we will take the depreciation, complete depreciation, 2,100 plus 900, and here also 2,100 plus 900. We will get 3 million amount we will reach. You will get total cost. Okay. Progress. Cost to date, it is a input method. Cost to date divided by total cost. Output method, work certified by contract price. Is it right? Output method, work certified by contract price. You will get progress, 75%. Based on the progress, we have calculated the profit. Is it clear? Just I will give one time, go through it, and then we'll go for the last one. Is it clear?
Yes, doctor.
Once it is over, say yes. Don't say that I will ask, is it clear? But don't say that yes, I'm not forcing you. Take your time and respond me.
Yeah, it's clear.
I know, little bit. I know you don't, that it is, you find it little bit difficult for that. Before you say, I will say. I will say, okay, don't make it a point. Because we have not done contract costing previously. This is the first time we are doing this. Fine. Now, coming back to this, what we are talking about? We are talking about statement of financial position. Is it right? Statement of financial position. In statement of financial position, how much is the property, plant and equipment? How much is the non-current assets? Value is how much? Depreciation how much we have
Uh,
calculated?
we calculated 900
900. Okay. We calculated
and
900. See the thing. 3, 6, 3 point, this in thousands. Okay. This is in thousands. I will put like this. This is in thousands. Fine. This is in thousands. 3600. Okay. Next. You have transferred how much? You have transferred 600. Is that this you have transferred to other contract? Okay. Now depreciation how much? Depreciation is 900. How much you will get? 31st March 2001, 31st March 2002. You should ask me one question, but you are not asking. I will tell you once completed, I will ask you what question you should ask me. Still I am giving you an option. Think. There should be one point we have to ask. Understand point? Very important point. You are not asking me. You should question me that. How much is there? How much you will get? 360. It comes to how much?
2100.
Is it right? No. 1 minute. 3,600 minus depreciation. Transfer we will take at a later stage. Okay? Transfer we will take at a later stage. 3,600 minus depreciation how much? 900. Is that? How much we will get? 2,700. And the next year how much you will get? How much is the non-current assets? This is for this one. This is for this one. How much is the 3,600? Depreciation how much we have calculated?
2100.
2,100. Okay. It comes to how much? 1,500. Next, what we have to do? We have to take the next is contract asset. Okay, contract asset. Contract asset. Revenue is how much? Revenue is how much?
14,000.
14,000. Okay, 14,000. 14,000. And here is how much revenue?
16.
No, revenue is how much? Revenue is how much? What is the revenue?
Here for
Total revenue is how much? Cumulative. Total revenue is how much? Revenue is how much? Where is that? Where is that? 40% revenue is how much we have calculated? Here we have calculated na revenue. Is it right? Fine.
35% and 75%.
75%.
This is the one?
Is it right?
Yeah.
It is 75%. How much? 30,000. Okay, fine. See revenue. Okay, next. What is how much you have received? How much you have received? Progress payments. Progress payments. How much you have received? Where is progress payments? See the things. How much you have received progress payments? 12.8. It is there. It is there. On the left hand side, see the things. It is there. I am putting it in purple color. Progress payment is there.
Yes, yes.
Progress payment is
Yes.
there. How much?
Yeah.
12.8. Okay.
0.8.
12.8. 12.8. And how much is the progress payment in the next case? Here, how much is the progress payment? A further progress payment is how much?
16 to
16.8. Okay. How much you have?
16.8.
Is it right? 16.8.
And further 16.2.
How much? Further is how much?
16.2.
16.2. 16.2. How much we have received if that is the case? See the things. We have taken how much? We have taken total 30,000. Is it right? Progress payment for 35%. Okay. And how much you have to take here? Progress payment. Yes, Hussein, tell me. I want your involvement. How much is the progress payment? See, this is what? This is with respect to 35%. And this is with respect to 75%. How much is the progress payment? A further progress payment means the previous payment plus current payment. Further means addition next to. Is that further means the additional for this year? Is it it? For this year, further payment is 6.2. If further payment is 6.2, the first one is 12.8. A further payment of 66.2 means the total payment for 75% is how much? 29,000. Is it right? A further progress payment. Is that a further progress payment? Already first they made a progress payment is how much? This is the progress payment they made. Okay? This is now they have made a further, means they have made a further progress payment, means they have taken it for the 12.8 plus they have done 16.2. Is that they have done 16.2. How much they have received? They have received one. Means in the first year, how much is the receivables? They have completed 14,000. They have received 12,800. Means how much they are going to receive in the first, they are yet to receive how much in the first year? They have yet to receive a contract asset is going to be how much? 1,200. In the second case, how much they are going to receive? They have completed the work 30,000. They have received how much? 29,000. They have to yet to receive how much? They are yet to receive 1,000. Is it okay?
You can say yes.
Little bit. I am saying, see, before you say, I will say.
Yeah.
I will say very clearly. I will say 30%. Understand? I am very clear. I will on record I am saying this. 30%. revise,
Yes, correct.
revise, it will improve. We will do, I don't think so we have come across this type of question till now. In question bank also,
Yes.
in question bank also, I didn't find this type of question. My experience says, maybe I have not done, maybe I have not come across, maybe in other books it is there, but to the extent BPP and Kaplan, till now I didn't come across this type of question. Very simple. Understand? This is there in the chapter, but this is not there in the exam. If you come across, let's see. Understand what I'm telling you on record. Is that till now I didn't come across. Little bit difficult, little bit about depreciation, all those things we have to work it out. Okay? But don't worry, if we come across any time, we will refer this question and we can understand much better. Is it okay?
Yes, doctor. Yeah, doctor.
Okay, don't worry about that. Okay, everything will not be easy, my dear. Some questions.
Yeah,
See, every chapter. Take my word. At my experience, every chapter before multiple choice question, last question will take our time. You start from the chapter 1 till every chapter. Is it right? Every chapter, last question, it will take our time. Okay? Fine? Okay. We'll complete this and we'll close it off. Okay? Five questions are the, these are there, just we will complete it. We can do it in a specific way. Okay? We can do it in very quickly we will do. Okay? Quickly means with understanding.
Yes.
Okay? Quickly means with understanding. Fine? Now, the following information relates to a contract of construction of the building of the customer. The builder has the right to regular payments as work in progress. What is the revenue? Cost of sales and gross profit should be recognized. Is that to be recognized? How much is the contract price? Contract price is how much? Total profit will be how much? See, I am just putting like, okay, step 1, okay, don't do anything, just do it. Total price, contract price is how much? Contract price is 5 million, okay. Cost to date is how much? Cost to date is how much? 1.8.
0.8.
Okay. Cost to complete is how much? Cost to complete is how much? 2.2. Overall profit is how much?
One.
Overall profit is how much?
1 million. 5 minus
5, 1.2, 2.2, 4 minus 5, how much?
1 million.
1 million. Okay, fine. Next, progress is how much? Output method. Is it? Output method. Output method. Output method is nothing but work certified divided by contract price into 100. You can use this one. Okay, nothing will happen. Multiple choice questions. Okay, work certified divided by contract price into 100. How much is the work certified? Work certified is 2 million. Is it right? Contract price is how much? 5 million.
5 million.
Into 100. It comes to how much?
40.
40%. Okay. Now, profit and loss account. Revenue is how much? Contract price times progress. Okay, contract price prime progress. How much is the contract
5
price?
million.
5 million times 40%. 2 million. Okay.
Yeah.
Okay. Next, I'm doing from the examination point of view. How you have to do in examination. Should not do all the things. Okay. Multiple choice questions. Very short method. statement of financial position. Is it right? Statement of financial position. Either they are asking statement of financial position. No, they are not asking statement of financial position. Now, what is the revenue? What is the answer? Tell me. Cost to date is nothing but cost of sales. Cost to date is nothing but cost of sales. Cost of sales is how much? 1.8. Where is 1.8? This is 1.8 and this is 1.8. Revenue is how much? 2 million.
2 million.
See, 2 million is the revenue. Okay, see.
Yes.
This and this. Gross profit is how much? Gross profit is how much?
0.2.
0. How you got 0.2?
2 minus 1.8.
2 minus 1.8. Are you clear about this?
Yes, doctor.
Next.
Hussein want to say something. Hussein? Where is it?
Yes, Hussein, tell me please.
Doctor, can we do it next class?
No problem.
Because everything is in one time. It's
No
very
problem.
difficult
No
to
problem.
understand.
No problem.